Hello, everyone. This is Matt from Blanchette Homes, and this is another episode of Money Talks. And we're here with Brian Andler from Embrace Home Loans. Hi, Brian.
Hey, Matt. How are you today?
I'm doing great. Brian, we have a much contested question for you today. People are asking, when is this bubble going to burst?
Great question, Matt. And I hate to burst your bubble, but the bubble's not going to burst.
You had to say it.
We, all of this is economic forecasting, but we have to look at a few things. Right now, what we have a demand that is far outweighing our supply. We don't have enough new homes for people to purchase. I'd imagine you probably have 12 buyers for every listing that comes on the market. The other thing we have a growing population of first-time home buyers. For the next 3 years, the population that is eligible and can become first-time home buyers and buy houses is growing, and that's for the next 3 years. The other thing we have that is going on right now, you'll probably hear us a lot of talk on the news about the Fed, and the Fed's going to have rate hikes this year. They're predicting 4 Fed rate hikes. And what has happened in the past? If we look at history, Chairman Powell is in charge of the Fed, and this was done by Bernanke and Greenspan, and in the 70s by Volcker and Burns. When they increase the overnight lending rate or the Fed rate, we start pushing ourselves in 12 to 24 months into a recession. And with a recession brings lower mortgage rates. So lower mortgage rates, more demand for housing. Also, we're just not building houses quick enough to meet the demand of the intense outnumbering of buyers to sellers. And, also right now we're dealing with 3 to 5% appreciation of houses every year and 7% inflation. So if we do go into a recession, what they're trying to do is slow down inflation. Inflation slows down, the house prices will not go up as quickly.
Got it. So no bubble bursting. What buyers can hope for maybe is they're going to slow down the rate of appreciation so houses aren't raising in value as quickly, but this isn't falling off a cliff anytime soon.
No, I know everybody's scared because we all lived through 2008.
Right.
And in 2008, it was the Wild West. You had people who were purchasing houses with no income verification, no job verification, no asset verification, 100% financing, negative amortization loans where, your principal balance would actually grow.
Yeah.
While currently what we have since the fall of the market in 2008, the government has stepped in and regulated the mortgage industry with the Dodd-Frank Act. It's all based upon, all of your lending today is based upon taxable income, good credit, and, everything is documented. There are no more.
Have to be qualified to buy a house now.
Yes, you actually have to be qualified. You don't just have to have a credit score and a.
Well, I will say with all the regulations, you do a great job at getting our clients qualified and finding out what the best position for them is. So thank you for all that you do for the buyers that we've worked with. And if you have any more questions for Brian, he'd be happy to help you in your specific situation. Everyone's a little different, and Brian's a wealth of knowledge. So please look him up, his numbers in the comments below. And thank you for tuning in. This has been another edition of Money Talks. We'll see you next time.